At some point, you have to realize that all good things come to an end. Wild exuberance fades, prices flatten out, bull markets flip. When, though? Is that something we can plan around? The rate of change in the gold and silver market is making it really hard to focus on anything other than price. And at the time of recording, gold is now above $4,180. Silver is above $52. Bank of America just increased their price target for gold to $5,000 in 2026. And they didn't say anything about silver, but all you have to do is throw a stick. You'll hit an amateur commentator saying silver's on its way to 80. So we just aren't thinking about metals the way we normally do, and maybe we shouldn't because they aren't acting the way they normally do. But all this moonshot euphoria kind of covers up an important fact. Bull markets don't last forever. And before we take that further, quick shout out to channel sponsor Summit Metals. If you're looking to buy gold or silver, they have you covered. And hey, if you're looking to sell, they have you covered there too. They'll take care of you on both sides of the sale. SummitMetals.com. So we want to know just how long all this might last. And it's an important consideration, but let's be really clear here. I'm not about to jump off a market just because it's going to correct someday. Crash even. There are so many people smarter than me who've proven that riding markets beats trying to time them. You've heard it before. Time in the market beats timing the market. And this is what they're getting at because the biggest mistakes aren't made when markets crash. They're made when we think that we can outsmart them. And getting into that outsmarting idea, we should start off saying that as far as risk goes, gold in particular is not some kind of speculative game normally. It doesn't have extreme risks to buy into. And I really don't think silver is either, at least not yet. Now, I've said before, silver is more of a trade for me. It's more volatile. It runs harder, falls further. But before somebody comes in and says, that's just like your opinion, man, we're going to look at actual performance through history and take a look at how long bull markets tend to last. We're going to do that for each asset. Now, this is not an attempt to get ahead of the music ending. This isn't musical chairs. We're not sitting down early to make sure we have a seat. This is just to get a sense of how the music might change and what we need to do about it. Okay, let's start with the stock market. This is probably the best measure we have of what people think a bull market looks like. According to S&P 500 data going back nearly a century, the average bull market lasts about 5 years. Now, we can see some are shorter, some are longer, like the prior rally from 2009 to 2020. That lasted 11 years, but 5 is the rough midpoint. Now, gold bull markets last a little bit longer. We can see from 1970 to 1980, gold went from $35 to $850. That was a 10-year bull market, 2,300% gain. The next bull market ran from 2001 to 2011. Gold ran from $250 to $1,920. Another 10-year bull market, 600% gain. And the current bull market started in 2018 around $1,180. It's now above $4,180. That's 7 years in. So if the stock market's average bull run lasts about 5 years, gold's lasts closer to 10. Now let's look at silver. I actually squint a little bit. This is gold. I'll put some smaller coins in here though. Silver's bull markets don't last as long. From 1978 to 1980, silver ran from $5 to $50. That's a 2-year bull market, 900% gain. Then again, from 2008 to 2011, silver ran from $9 to $49. That was a 3-year bull market, 440% gain. And the current run from 2023 to 2025, $22 to over 52, 2 years in, that's around 136%. So far. So if gold's bull markets tend to last closer to 10 years, silver's average closer to 3. So quick recap, gauging from history, bull markets typically last around 5 years for stocks, 10 years for gold, 3 years for silver. That's the pattern. That's not a prediction, just a baseline. So this would suggest two very interesting things. The first is that silver is about to get really crazy entering its final year of the bull market. And second, gold is still really just getting started with 3 years left to run. Now I said interesting, but it's also flawed because it doesn't make sense that the silver market would flip 2 years before the gold market did. Normally, we'd expect to see those liquidity events line up, with capital rolling out of gold into silver, extending a run-up in silver price, leading to a blow-off top. Now, acknowledging that it doesn't make sense in our current case today shouldn't cancel out the baseline idea here that gold rallies tend to be longer, silver rallies tend to be shorter, and everything changes. We're basing these lengths of time, 5 years for stocks, 10 years for gold, 3 years for silver, on a grossly small sample. Literally just the last 2 bull markets for gold and silver plus the one that we're currently in. Now, probably the biggest takeaway is that we shouldn't assume what we're seeing today is going to simply continue forever. And I would like to think that that goes without saying, but I don't know that it does. Bank of America calling for $5,000 gold right after we rocketed to 4,000 feels normal. Like, it just makes sense that gold will keep running. And it's not just Bank of America. A Fortune article just cited Ed Yardani saying if gold continues on this path, it could hit $10,000 before the end of the decade. He had the same $5,000 in 2026 prediction. So the warning here isn't silver only has 1 more year to run, gold has 3. It's just that at some point, every rally comes to an end. So some of that discipline that you have when price is static needs to stick around when it isn't. So it would be great to know just how long the current bull markets will last, when we'll see the peak, how we position around it, but we can't simply use 2 past cycles as some kind of shot timer. We also don't want to just write that off as noise, though. That 10-year average for gold, the 3-year for silver, that's something that's widely referenced. You'll typically hear people note 8 to 10-year cycles for gold, 2 to 4 for silver. And if we use those ranges and line up an end point, knowing we're 7 years into gold, 2 years into silver, well, 2027 fits into that standard cycle timing. Oh, it's also interesting to note that most analyst cases for cycle duration and bull phases run through 2026 and some into 2027. It's rare, though, to see an analyst predicting anything beyond that. That case for $10,000 gold by the end of the decade, given in that Fortune article, that's rare. And it doesn't really have anything propping it up beyond if it continues to run on this path. Now, I haven't seen anything yet suggesting an end to the cycle. I'm not saying that we're done in 2027, but it is notable that analyst predictions rarely look beyond that time frame. Now, the most important part here is going to be to try to get a feel for whether an end is in sight. That's really all we can do, and right now, it isn't. The conditions that typically signal the end of a run aren't here. We don't have the wild abandon, no blow-off top. What we're seeing now still looks a lot like the mid-cycle expansion, the point where momentum is strong, it's not irrational, confidence is high, but it's not overconfidence, and prices are being driven by fundamentals rather than just frenzy. And if that's right, then the market that we're in right now is still early in the second half of the cycle, and that's where most of the volatility lives and also a lot of the opportunity. So as far as we can see, the really fun part is still ahead of us. And let's call it good there. Let us know what you think. Can you even keep up with the price change that's happening right now? We're pushing $4,200, and 30 days ago, we were below $3,700. So I don't know, maybe this is frenzy. Let us know what you think. And then while you're in the comments, be sure to hit that like button if you found any of this interesting. Be sure you're subscribed with notifications turned on if you want to hear more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.